Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday the 28th of February. This last chart of the day is gold, and I'm beginning to get a little bit concerned actually now with gold. There are now some very early signs of a correction now in this recovery that we've seen in this gold price. You've got some bearish divergences. You've got a bearish divergence on the stochastics, which is where you've made a lower high on the stochastics but a higher high in the price, and also on this RSI as well. Again, a higher high on the price but a lower high on the RSI. So that, coupled with the fact that the MACD lines are also beginning to threaten a crossover sell signal as well, maybe this could be the start of not a major correction, but certainly the waning of the recovery, and maybe a minor pullback in this gold price now. So interesting on that daily chart. So watch out for that. Intraday, you'll see the pressure. Also, you've got this big uptrend that I've drawn in. That uptrend is now under consistent pressure. Also, you've got this 200-hour moving average as well. That has become supportive on this chart, and it is also under pressure. So that, coupled with the fact that you've got this slight sort of top pattern, you could argue. I'll zoom in a bit closer here. We'll see more about what's going on. You've got this slight top pattern that you sort of, gold did push back above it yesterday and sort of fought for it, but it's now rolled over and it's back below that neckline resistance. So you'd say that you're beginning to I mean, this is you'd argue in the last couple of days it's basically been consolidating sideways, but the fact is that this big uptrend is under pressure. Also, the moving averages are rolling over as well. So the moving averages are no longer in positive configuration. On the intraday hourly momentum indicators, the RSI is pointing lower. You've actually broken below the two lows there, so that is an interesting development. And also the MACD lines are rolling over and the stochastics are in decline as well, so that suggests that downside pressure is growing in this chart. And certainly I think these two key lows here, 1323.59 and 1322.09, are key on this chart now. Certainly if that 1322.09 low were to break, then that could begin this correction back towards, on the intraday chart, back towards that $1307 dollar mark. So watch out for that, and it sort of would be in keeping, I think, with the daily chart, which is beginning to, as I said, roll over on those momentum indicators. And I still think that there could be a room for a correction back towards 1300. I think generally on this gold chart, a point at which I think the bulls will start to re-engage once more and then push higher. But certainly there is potential for that correction back towards that 1300 mark, and the intraday and the daily chart are beginning to show signs of that move. So watch out for that. I think the key level on this chart to look for is 1322.09. If that levels were to break, then the pressure would certainly grow to the downside. Anyway, so I wish you good luck with your trading on gold today, and I will speak to you next week. Thank you very much.